Last video I told you that the first step in the home buying process, unless of course you're paying cash, is to obtain your pre-approval letter. But there are actually 3 things that you can do prior to getting pre-approved that will not only strengthen your pre-approval, but they may also improve the terms of the loan that you're offered. So what are these 3 things that you can do? Number 1, make sure your credit's in line. Number 2, make sure you have enough available assets to cover the total cash to close on your loan. And number 3, make sure that you've got your current living situation squared away. Now let's take a deeper look at how these impact your loan. First up is your credit score. And your credit score is going to do 3 things. The first and most important is it's going to determine if you can even qualify for a loan. So there are going to be minimum credit score requirements regardless of loan type. Typically what you'll see is the minimum credit score is going to be 580. However, there are situations where you could get approved with a lower credit score given that you had more assets available to put towards a down payment. The next thing that your credit score does is it determines what type of loan you qualify for. So there are different minimum requirements for different loans. For example, an FHA loan may require a minimum credit score of 580, while a conventional loan requires a minimum credit score of 620. The final thing that your credit score does is it determines how your interest rate will be altered. So your interest rate is going to be impacted regardless of the loan type if your credit score is less than 740. 740 is the benchmark that is used when determining credit score. Next up are your assets. And just like your credit score, your assets are going to determine 3 different things. The first is what type of loan you qualify for. And there are different minimum down payments required for different loan types. The second thing that this is going to do is determine if you will need any type of assistance. Now this can come in the form of a seller credit, a lender credit, gift funds, or down payment assistance, just to name a few. Finally, your assets will determine if you will require mortgage insurance. So any loan where you're putting less than 20% down will require you to pay monthly mortgage insurance. Unless of course you're using a VA loan, this will not be a requirement. Lastly, you'll want to assess your current living situation and make any necessary arrangements. Let's say that you currently own your home, and in order to purchase, you're going to sell this home. You will want to determine the fair market value of your home as well as the net proceeds that you'll receive from this sale. Any realtor can help you do this via a comparative market analysis as well as a net sheet. Let's say that you're currently renting and your lease is about to expire. You need to figure out if you're going to be granted a lease extension, for how long, or if you need to make new housing arrangements. Finally, let's say you're locked into a long-term lease. You need to find out if you have a cancellation clause that would let you out of that lease, and if so, how much it costs to exercise that option. So let's bring this all back together and recap why having these 3 things in line prior to getting pre-approved is so important. First and foremost, this is going to determine if we can even qualify for a loan to begin with. Secondly, this is going to provide us with a roadmap of exactly what we need to do in order to either A, qualify for that loan, or B, strengthen our pre-approval and get us the best and most desirable terms on our loan. So let's look at an example. Let's say that your current credit score would not allow you to qualify for a mortgage. But let's say that you've got 9 to 12 months until you're actually looking to make that purchase. You could utilize this time right now, maybe working with a credit repair specialist or somebody in that field to optimize your credit, get you to a level where you are now qualified to make that purchase instead of waiting that entire year and then not getting approved. So again, it gives us a complete roadmap. It also allows us to plan, prep, and budget accordingly. So let's say that you find out that you're going to need an additional $5,000 in assets for your actual cash to close on this loan. Same scenario, let's say that you've got 9 months, maybe a year before you're looking to purchase. You can put that plan in place of what you need to save or budget each month, so when it comes time to make that purchase, you're gonna have no issues at all. Thank you so much for watching. I hope this video was helpful. As always, if you have any questions, let me know. I would love to get them answered for you and squared away. Till next time.